your accountant told you, sir, this is cash to CS or cash to common stock. So you must understand that they are talking about a journal entry and in which cash is debited and common stock is credited, right? So, and how you write it down in business journal. So there is a book. This is basically a book, right? So in book, or you can also say that in small businesses, this is also called memos. So you just open up, there is like 4 columns. You can just write it down here like that. So here we go. So cash, and then you make a next line you make a space here, and then common stock, right? So you don't see the entry like that, cash, common stock. Why? Because this entry is wrong. Why? Because it should be like this, cash, and then there would be a space here, common stock. Okay, right? So there is like a common one tab here, right guys? So you write it down, the values, and you see debit at the end must be equal to credit. See, 50,000 debit, 50,000 credit. And before closing this entry, you write it down some kind of your narration here, so that you know, if you know, back in date, if you open and you want to see that transaction, so you understand that okay, what happened? It's because business received 50,000 cash and issued stock. So you just write it down. This is your own analysis. For example, cash received against common stock or issued common stock against cash. So this is on your like very short explanation. You write it down, and that's it. And then this transaction is completed. Okay, I know you are having a little bit confusion here. Let's remove this confusion through some other examples. But first, so there are, like we just talked about here, the, you know, the T accounts, right? T accounts. So in reality, T account looks like this. They have separate, you know, Excel files in different softwares, or if hard copy is like that, there is some kind of memos or some books printed like in column wise, and on the back, on the start of the book, you write it down. This is cash register. This is cash copy. You open that one, right? See, this is individual accounts, right? So individual accounts or T accounts, we call this ledger, Ledger. So which are the individual accounts of, you know, how we are basically posting the entry over there. So let's just talk about it, how we are going to basically post the entry. See, posting. Before, what we did, we record the transaction in journal, and now we are posting the transactions, which means posting means we are entering in ledger stuff. So let's see. So if you pay close attention to this journal entry, which is cash to common stock, right? And now if I say cash to common stock, what does it mean? Cash is debited.
It means that we issued, we receive cash against common stock. So we will issue new common stock and receive on the credit.
Exactly. So you must understand that the debit should be written first, should be pronounced first, right? You cannot, you know, write it down the transaction like this, common stock, for example here. Let me just clear this. So you cannot, many students, they, you know, they say that, you know, there is no logic. Yes, there is no logic. Why? Because this is convention. All over the world, the entry is written like this, so that, you know, if you are in Malaysia, you are checking about your, you know, your business in journal entries or journal information from Thailand or from China. So you must understand that, okay, this transaction must be like this. So First of all, you write it down, cash to common stock. Let's just write down common stock. This entry is good. So you cannot write it down that, okay, this is debit and this is credit. So you cannot write it down like that. Common stock, credit, cash, debit. So this transaction should be wrong. Why is that? Because the general rule or conventional or global, rule is that we start pronouncing or recording entry from debit to credit. So this entry is wrong. So the real entry is cash to common stock. So it means cash is debited, common stock is credited. So you see also there is a one tab space here. There is a one tab space here, right? And you would see this kind of space throughout this lecture. So these are just how you make the entries, okay? These are some rules. There is no logic behind that. There is no rocket science behind that. It is just to make, the things standardized so that all over the world, if you hire some accountants or if you want to yourself see the business positions, so you just understand that, okay, what's going on. So that you can also understand the language of the business. And we talked about in our first lecture, accounting is the language of business, right? I may not speak Chinese, but I do understand the accounting. Here we go. So how we are going to post this? So we make a T account, right? T account here. So we know that left hand side is called debit, DR, and right hand side is called credit. All you need to do, so this is a cash is debited, right? Cash is debited. So you just put, you got it? Just put 50,000 on the left hand side. Understand? What about the common stock? Common stock is to be recorded over the right hand side. Here we go. Understand? Right? Kathleen, Lota,
Yeah.
Anis,
Yes, understand, sir. Yes.
Fabian, Wusong.
Yes.
Understand? So this is basically the account title. So this is the account title. And in account title, where it needs to be written, left or right, credit mean the right side. So you just write it down on the right side. Right, guys? Okay. Let's further talk about, here we go. So the flow of accounting data is that first transaction occur. So first of all, you need to understand that whether this is under the category of transaction or not. If any event occurred, so you need to see that this is the transaction. Why? Because it has financial impact, right? So how you analyze that one? It has a financial impact, and then you make journal. We just talked about how you make a journal, debit to credit. And then you post. Posting is called ledger, right? So now question arises whether this, what we are studying, this double entry system, whether it coincides or it supports this accounting equation or not. Let's talk about this. So business received cash 50,000 and issued common stock. So in assets is equal to liabilities plus owner's equity, where we write it down? So can you tell me, Fabian? Fabian, can you hear me? Okay, Lota, can you hear me?
Yes.
So can you tell me about this transaction, how we are going to put in accounting equation?
The $50,000 goes into assets.
Right? So there would be a cash here, so we will write it down 50,000, right?
Yeah.
And this issued stock, where we are going to write it down?
And stockholders' equity.
Well done. So under common stock, we will be writing down this 50,000 here. So equation is balanced, right?
Yes.
In accounting equation system, we just balanced this accounting equation system. So how this transaction is going to be recorded in double entry system? Here we go. So the entry would be, we just talked about entry would be cash to common stock, right? So one check is that debit is equal to credit, right? So it means this journal also satisfies the accounting equation. How about the ledger? If you see the ledger, cash is to be, debited, and common stock is to be credited. So you see, the accounting equation is balanced. Okay, now the second transaction. Now the second transaction is paid 40,000 for 40,000 cash for land. So how we are going to record it in assets? Now this time, Florian. Florian, can you hear me? So put this transaction in accounting equation. Florian, I cannot hear you. Okay.
Is that still in asset, like pay? Yours is paying cash.
Paying cash. Cash belongs to liability.
Cash belongs to assets, that's for sure. But
then it means 40,000 would be written like this here, right? But it's pay. Pay means cash is going out from the business or coming in the business.
it's out, so yeah.
Negative, right? On the other hand, land belongs to
Land is C.
land is also assets, right?
Yeah.
Land is the asset. Asset increase. Equation is again balanced. 40,000 cancels, right? So this is how you